What's going on, money lovers? This is Vinny from the Investment Club. Welcome back. So today I just wanted to touch on IBM, briefly recap their Q3 earnings and my outlook on the company. I just did a video on IBM about a week or two ago, which I'll link in the comments below. Anyway, you probably saw today, this company got clobbered. They're in the trenches right now after reporting their third straight quarter of declining revenue. That led to the major sell-off today, which caused IBM to drop almost 7%. And where others are being fearful, I'm being greedy, and I did buy up some shares today, and I'll get to why I'm still confident in IBM in a minute. First, I just want to recap Q3 earnings and touch on some important factors. Now, I still think this is a great value play, and if you're a long-term investor like myself, it'll still pay off in the long run to own this company, and I'll get to why in a minute. So here's a quote I found today by analyst Daniel Ellman that really resonated with me. He said, "This is one of the last quarters where IBM's lagging hardware business will drag down performance as these operations will be spun out to NewCo in 2021, with IBM instead focusing its attention and investment behind cloud and AI, its strongest performing areas." If you watched my video from last week, I talked all about this. Now, IBM is a great company that historically has been a big innovator, if not the biggest, and it's fallen out of favor with Wall Street and investors in the last few years because it really was being mismanaged and they stopped innovating. The CEO was not taking the company in the right direction. They got too focused on short-term goals and quarterly profits. And turning this company around is not going to be an easy fix nor an overnight one. This company is not going to make you rich overnight, but this is a company where I could see, if all goes well, they stay on their current path with their key focus being on hybrid cloud and AI. Under the leadership of CEO Arvind Krishna, this company could double to triple in value, I'd say, in the next 3 to 5 years. There's a significant opportunity in the cloud business, and it's also a high margin and highly profitable business as well. All right, so a few important things to note from their third quarter results here. We see here they had revenue of $17.6 billion, down 2.6%. And this was, like I said earlier, this is the third straight quarter where revenue has declined. That's why the stock is getting hammered today. However, if we look at their cloud and cognitive software revenue, that was up 7%. Total cloud revenue was up $6 billion, or 19%. And total cloud revenue over the last 12 months was over $24 billion, up 22%, and the Red Hat revenue from their acquisition of Red Hat was up 17%. So as you can see here, all of their areas of growth, everything that they've come out and said they're going to put their full focus on now and spin off everything else into a separate company, is doing great. If we look at a quick breakdown of the two new companies, the new IBM will be the #1 hybrid cloud platform and AI company, while the new company that will be separate will be the #1 managed infrastructure services company. It will take all of these less profitable segments of IBM business where revenue is not growing and it's stagnant, and these companies will be able to work with each other to create a strategic partnership in which both companies will be able to prosper. The new and improved IBM will get back to being a growth story and innovating and focusing on cloud, while the new company that is yet to be named will handle IBM's historic business segments that bring in a ton of cash, they're just not growing. Arvind Krishna has extensive experience in the field of cloud. He was the chief architect behind the acquisition of Red Hat. He's been with IBM since 1990. 2015, he was promoted to Senior Vice President of IBM Research. He later became Senior Vice President of IBM's Cloud and Cognitive Software Division. He also led the building and expansion of new markets for IBM in artificial intelligence, cloud computing, and cloud quantum computing, which I'll touch on later. This is another fascinating field, and blockchain. He knows what's up. He's going to take the company in the right direction. A few more things about the Q3 earnings, and then I want to get into quantum computing. So if we look at their revenue, you see that their cloud and cognitive software revenue was up from about $5.2 billion to $5.5 billion. Now, this segment of revenue was their only segment that grew. All the other segments declined in revenue, but like I said earlier, all of these segments are going to be spun off in 2021 into a new company. So cloud is going to be the primary revenue driver for IBM, and it will be their sole focus. In addition, if you look at the gross profit margin, this is what I was getting into earlier, cloud and cognitive software is a much more lucrative business than some of these other segments. As you can see, their gross profit margin was 77% for cloud as opposed to 32%, 35%, and so forth for the other segments. The last two things I want to touch on from the report are their assets and liabilities. So if we look here, you see that their total assets is over $150 billion. It's a massive company with a lot of resources. Now, they do have a lot of liabilities totaling $132 billion, and $55 billion of that is in long-term debt. A little over $10 billion is short-term debt. However, CFO James Kavanaugh did say in an interview that the company finished the quarter with $16 billion in cash, and he said that the company will use some of that to pay down $4.5 billion in some of the debt coming due in the fourth quarter, and the company had roughly $65 billion in debt at the end of the quarter. So at least they are taking steps to pay it down. This is definitely something to keep an eye on, as I'm sure they will need to take more debt on until they really get the ball rolling with the two separate companies. If they do take out more debt, I'm sure they'll be able to get it at a very favorable rate right now because interest rates are so low. So this is definitely something to keep tabs on. All right, so as promised, a quick note on quantum computing. Now, this is a pretty techy subject. I'm not going to get too deep into it. I'll link an article in the description below if you want to read more about it. But this is a fascinating field. Basically, what quantum computing does is it gives us the ability to solve complex problems, and it will open up a new universe of information, change our view of the world and the way we navigate it. It's a relatively new field, and this is a complete wild card. I think that there is so much potential here that we don't even fully understand yet, and only time will tell. So definitely check that out if you want to learn more. Oh, and did I mention IBM is the leader in quantum computing? This is basically just a wildcard bonus to their whole cloud segment. So I'm still bullish on this company long term, and I'll continue to scale my position to where I want it to be. I bought a little more today with the big dip, and I'll continue to dollar cost average in. Obviously, revenue has also been down due to everything going on in the world with the pandemic. And historically, IBM usually has a very strong fourth quarter. That's usually their best quarter, so I'll definitely have my sights on that, and I'm eager to see how that will go. And I think it will start trending in the right direction. I think their revenue will increase in Q4. IBM is not going to go quietly into the night. They have a vast war chest of assets, and I think it's going to take at least 2 to 3 years for the company's new direction to really start to make some noise. And I expect it'll continue to trade sideways in the short term. So I'll continue to average in, collect this nice 5% dividend, and own a company that will soon be a serious competitor to the likes of Microsoft and Amazon. I don't usually focus too much on things like PE or price to earnings ratios, but I think it's worth touching on here. Generally, I like to look at a company's future potential when I'm considering investing in it, not its past. But if we look at IBM, the PE ratio can be a good indicator for if a company's undervalued. And as you see, IBM's PE is a little over 13, whereas its competitor, Amazon, has a PE ratio of 123, and Microsoft has a PE ratio of 37. So if we're going to compare the three by PE ratio, IBM is the most cheaply valued by far. I think if you look at IBM as a serious competitor to Microsoft and Amazon, then you could say it's very cheap right now. So this is definitely a long-term play for me, but then again, I am a long-term investor, so everything's long-term for me, really. I think there's a lot of potential here in the 3 to 5 year time frame, and I'll continue to monitor how they execute, and I look forward to their fourth quarter. So let me know what you think in the comments below. Are you buying IBM? Why or why not? If you enjoyed the video, don't forget to like and subscribe. This is Vinny from the Investment Club, and I'll see you next time.